And speaking of portfolios, I want to give you an overview of what our process is working with our money managers. So, and we are going to go into more detail next month, I believe, Dan. This will just kind of give you an overview taste, and then we're going to dive deeper into what those actual strategies look like. But from a 30,000 foot level, here's kind of our framework for portfolio development to achieve your goals. It starts with a money manager, the portfolio managers, and them coming with, on the top there, their asset mix, a stock and bond strategy. What is their overall strategy that they're trying to employ to either grow income, grow your account, so on and so forth, or protect your account? So they come up with an overall strategy, and then they drop down to the next level, and that's your equity mix. What do we need in the portfolio to achieve that strategy? Large or small stocks, US or international, growth or value. Again, we just showed you why you want to be overweighted in the US and maybe China versus Europe. You know, when you're looking at these trends, they're constantly looking at what equity mix is going to meet their strategic goals for the portfolio. Then you get into the actual research and the fundamentals that they monitor on a daily basis and the trades that they actually make based off of the fundamentals. So this is where the research is done in the stock and bond selection that's going to give them the proper equity mix and meet the ultimate strategy objective of the portfolio. So that's where the portfolio managers are focused on. Setting a goal for the portfolio and working towards that from fundamental research standpoint. Our job at Daniel Krug and Associates is sitting with you and talking about your goals, your values. What do you want to accomplish financially for your future? And then we go to those managers and create a custom portfolio, pickings and selecting different managers using separate accounts for each of those strategies so we can monitor how those strategies are doing against our goals. And ultimately, the portfolio construction management, after we've created that custom portfolio for you, to rebalance it, to harvest losses and gains in the portfolio. And then timing is as things change with your goals, what do we need to change in our manager selection to meet those changing goals you have? So we're constantly working with the managers that they're achieving their goals and that you're achieving your goals. So that's our job, is being that go-between for you, plus all the advanced planning strategies. This is just focusing on building a portfolio to meet your goals. Again, we're going to go into more details on this in the next month's webinar, going into more detail on specific strategy types and how they work. So we might come back and touch on this, but then dig a little deeper. We want you to also start thinking a little differently with what's going on because of the low interest rate environment, you know, and the volatility that we're seeing. So instead of thinking in terms of stocks and bonds, we want you to think in terms of, where are my sources of returns going to come from? And when you look at this breakdown, starting at the top, dedicated growth strategies, what you're going to see driving portfolios is going to be U.S. equities, large, small, mid-cap companies, internationals, whether developed and emerging, and constantly rebalancing that portfolio based off of the trends that we're seeing in the economies. Then growth and income strategies. Since we're in such a low interest rate environment, you're going to see more high dividend and income equities, plus opportunistic income. And I'm not going to go into detail on that today. That'll be the next. But that's an area where you're more actively managing and looking for shorter term opportunities to juice that income portfolio a little bit. But that has to be tactically managed to do that. If your goal is safety of principal, you know, your core fixed income portfolios have done an outstanding job of capital preservation, you know, and providing some growth to maintain your inflationary value of your portfolio so you don't lose money to inflation over time. And finally, alternative investments. And this could be alternatives towards income, like we talked about, opportunistic, or other types of alternative investments, for growth or total return portfolios. We have equity alternative strategies, and then fully diversifying your portfolio with additional things such as commodities, private placement, real estate. There's a whole bunch of alternative investments outside the stock and bond markets that we incorporate into portfolios to either enhance the income, enhance the growth, or further diversify the portfolios. So again, we're going to go into a little bit more detail on that in the next meeting. Our money managers are focused on high quality companies with reasonable valuations, and they have a reason for this. So I know there's been, in this time, there's probably, Dan, been more speculation over the last 12 months with some of these technology startup companies. And everybody's like, how do I jump into that? How do I jump into that? Well, the thing you don't hear is for every one that's a winner, there's probably 9 losers. So if you really don't know how to play this market, it is highly, highly speculative. Plus, look at the profitability. So when you strictly look at profitability of an emerging technology stock versus evolving consumer, the digital revolution, or healthcare innovation, speculative companies' profitability is a minus almost 40%. So you're literally buying stock that is losing money.
Now, some might say, yeah, but what about all the ones that are winning? Because I always hear someone saying, hey, they bought into this and they just won big. But I guess that goes to the number of stocks that go down to the ratio on the ones that go up. So I guess they just got lucky on that.
Yeah, and our money managers have proven over time that it's not stock selection. It's really understanding the trends and being in the sectors, because you don't know who's going to be the winners and losers. Let's also look at valuations, though. When you're looking at what you're paying for that stock compared to other technology stocks, you're probably paying 4 times over in the price of the stock versus other types of technology. So we're not against the new trends, but you don't want to build your portfolio around speculation. You want to build it off of fundamentals. And if you're looking for a certain rate of return, we can achieve those without getting highly speculative. So that's the point of this chart, is to know that the money managers will focus on that. They're not just trying to take a chance with your money. They're doing prudent investing. They might have some of these positions, but it'll be very, very small in the overall scheme of portfolio development.